Welcome everybody to another episode of Ganbei. I'm your host, Art Dicker, and today we have a roundtable format with three very distinguished guests. I'm thrilled, absolutely thrilled to have James Hull, founder of Hullx and co-host of China Tech Investor, a podcast backed by TechNode. Excellent podcast. I highly recommend our audience to check it out. Our next guest is also very familiar with digital currency as well as DCEP, which is a potential threat to Alipay. Jemma, co-founder of RedBlock Capital, will help us on that part especially. And then we have Brian Fleming, who is, for listeners of the show, has been a guest before. You'll recognize him when we talked about the TikTok and Wechat bans. Brian is a member at Miller Chevalier and co-host of his own podcast, EMBARGOED, which looks at trade sanctions, export controls, and other regulatory issues. And Brian is based in DC. Jemma is based in Melbourne. James is currently in North Carolina, I believe, but usually based in Beijing.
That's right.
Okay.
That's right. Yeah.
So just give each of you a quick chance to say a little bit more about yourselves and maybe your story with China, what's you're working on right now. James, want to start out with you?
My China story is I originally went in 2007, expecting to be there for 2 months, and it's been 13 years. And I've worked at a US listed company, kind of got some operational experience. I've worked in private equity with a Yangqi SOE, and now I'm on my own managing money and doing this podcast, China Tech Investor.
Great. Jemma?
At the moment, my focus is on blockchain projects, investing and trading cryptocurrencies. So the main thing is looking at, regulated digital securities. So looking at, basically how to leverage the blockchain as a technology platform to do securities issuances on the blockchain, right? Prior to that, I had my own startup in education, and that's essentially what brought me to China professionally back in 2014. And my corporate experience is in investment banking and finance. In Australia, I worked for Macquarie Capital, doing M&A and IPO. So really this blockchain is quite a confluence of my finance and startup background. So coming back a full circle.
Thanks, Jemma. And Brian?
Yeah, thanks, Art. Glad to join you once again. As Art said, I'm an attorney based in Washington, D.C. I focus on international trade and national securities issues primarily, and advise companies both in the U.S. and abroad on all aspects of those issues, of which there are many at the moment. I am also an alum of the U.S. Department of Justice, where I first started working on these issues, including working on CFIUS and supporting CFIUS reviews that the DOJ was involved in, as we will talk about a bit later, and also focused on economic sanctions and export controls, and in particular, the entity list and how the U.S. government deploys that. And a large chunk of my work continues to be China focused these days. So have a lot of thoughts on all these issues, and very happy to join today.
Yeah, it's a privilege to have all three of you on. It's going to be a fun discussion. So without further ado, let's get into it. For the benefit of the audience, which may not know as much about Ant or Alipay, I'm going to just run through real quick what are some of the key things to point out about them. So what we're going to get into today a lot is the IPO, which is coming up. They're raising $30 billion in Hong Kong and Shanghai. They just got CSRC, the equivalent of the SEC over here, regulatory approval for Hong Kong, and I believe they got the approval for Shanghai last month. They have a very interesting quote in their prospectus for Hong Kong. It says, "We call ourselves Ant because we believe small is beautiful, small is powerful." But of course, they're anything but small. They have 80 million merchants and 1 billion users. And the transaction volumes are not even funny. They're just mind-bogglingly large. Everyone knows e-commerce is a massive market here in China, and Ant and Alipay are intimately tied to that. Ant started as a part of Alibaba, actually back in 2004, primarily as a payment mechanism similar to PayPal. They were basically an escrow account between buyer and seller as part of e-commerce transactions. I think it's been well stated that when e-commerce was rolling out, and I think especially in China, there was a bit of a trust deficit between two sides of a transaction, and that's the void that Alipay stepped into to fill with the escrow function. Alipay, I think, really took off, and James got into this on his podcast as well, when QR codes took off proliferated in around 2011, where merchants could just display a code and you could scan it with your phone and make a payment easily. Alipay or Ant has 4 major divisions as they lay out in their prospectus. Credit tech, which is Huawei and Ganbei, it's basically credit for SMEs. So I think that's where they're getting at the slogan that they love small. They're not a bank. They don't actually originate loans. They're really more of a distribution platform for loans with other traditional banks backing those loans. And they also have quite a bit of an advantage making loans and advising on those loans with the data that they have on the borrowers using Alipay for their payment service. They have Invest Tech, which is basically URBAO, which you can think of as kind of a money market fund. They do also offer other investment products. Again, similar kind of business model. They're not actually building those products themselves or backing those products themselves. They're more of a distribution channel. InsurTech, same idea. As I understand, it's not actually insurance. They're just pulling kind of user funds into what's now known as a mutual aid program. InsurTech, as I think James will get into in a second, is the smallest of the four segments. And if it wasn't clear from what I said before, the fourth segment is payments, which is by far has historically been their biggest segment of their business, but as a percentage of the total has been shrinking. So, James, that's an intro for a deeper discussion about the IPO coming up and some of the financials. And it would be great for our audience if you could give them a bit of an idea on the distribution of their revenue among these different segments, the margins that they're earning, and where the most growth is coming from.
The first thing is, I think Jack Ma came out and said they're looking to raise actually $35 billion in this dual listing IPO. So it's a little special. They're listing in Shanghai and Hong Kong at the same time, and $35 billion would be the largest IPO ever. Mm-hmm. So that'd be pretty big. So yeah, their biggest chunk of their revenue is digital payments, they call it. And the interesting thing about payments, in general, payments is a great business. If you sign up merchants, they are very likely to stick with your system, and basically you can extract a small piece of every transaction. Also, there's the benefit if you're charging on a percentage of each transaction, that basically your revenues will automatically grow with inflation, which is, kind of rare to find in businesses. And the other kind of interesting thing is, payments, at least kind of digital payments in China, is a duopoly mostly between Wechat Pay and Alipay. And usually when you look at duopolies, you would expect prices to increase. And actually what's been going on with Alipay, you can see when you take their total processed volume divided by their revenue from digital payments, you can see their take rates actually declining, which is probably more indicative of it's actually still a very competitive market, and they can't raise their prices really.
The Alibaba empire and the Tencent empire are vicious competitors across all different segments.
Kind of switching to what they call digital finance technology platform. This is what I think they used to call this the Ant Financial Cloud. And basically this is, like you said, credit tech. And this is serving consumer credit and small and medium-sized business credit. It's interesting, if an SMB is using Alipay and collecting payments, they could be getting about 50% of their revenue through Alipay, which means, Alipay as a platform will know roughly 50% of their revenue, and they'll be able to see kind of how it's trending. And that is pretty helpful when you want to you're verifying revenue, which is a very helpful thing when you're trying to think about a credit risk or credit analysis. So they do have a lot of value to add there to their partners. I will say I think they do own some ownership in some of those partner institutions that they work with. And I think they also, and I don't think I mentioned this on our podcast, but I think they also do quite a bit of ABS, and they may retain a portion of that ABS. They do say they keep about 2%, or they have about 2% of their loans that are on their own balance sheet. But in general, they don't do that. So then the next piece is investment tech, and this is, Yuabao, like you said, it's basically, I think it's the largest kind of mutual fund in China. It was launched in June 2013, and it got big very quickly. When they first launched, their interest rate was I think north of 8%, and then quickly dropped down. And you could invest basically 1 Chinese yuan, and you could take it out whenever you wanted. So it was like, compared to, a time deposit in a bank, it was multiples of the interest income you would get. And it was tied to, not directly to Alipay, but through another group but there was a link. So you kind of had, consumers had some trust there. And then
I remember those days. My wife was telling me we should put all of our money into URBAL, but somehow it seemed a little too good to be true. And I guess it was just a loss leader, right, to get people on the.
Yeah, they gathered a lot of assets very quickly, and that initial interest rate, even if you got in at when it was at 8% or 7%, you didn't stick with that. It changes all the time, and so it went down very quickly. And then actually the banks got mad because they were kind of taking some of their deposits away. But that's maybe we can talk about that with DCEP. So InsurTech is the other one, like you said, serving insurance needs. There's some health insurance there. I think they also sell premiums. They sell plans kind of through it, but I don't think it's gaining as much interest from the big insurance companies in China yet. But the idea there is that they would be the tech platform basically for all the insurance companies. So you could go on there and find kind of like compare different things. And so the percentages of all these, so for total digital finance technology platform, let's go back to 2017, the end of 2017. All those 3 things, credit tech, investment tech, InsurTech, was about 44%. And so digital payments was about 56%. So digital payments has gone down to about 37%, while this digital finance technology platform, the Ant Financial Cloud, has gone up to about 63%. I personally think the big part where there's going to be a lot of growth is in this credit tech part. And that's really because they have so much data, and there's also, it's a kind of a government-backed, thing. Like the government supports lending more to SMBs. And the banks really can't do it. And I worked in a finance SOE, and I've gotten bank loans for project financing. And I've been through the process, and they do credit analysis, but at the end of the day, the only thing that matters is whether or not you have danbao, some sort of guarantee or some sort of collateral. And if you don't have sufficient amount, even with all the revenues that you could have in the future once your project's going, it's not going to pass. So whereas Alipay, if you own a restaurant and they can see what your revenues are every month, every week, every day, they know kind of roughly what kind of loan you could handle, and so they could lend to you. And by the way, Meituan's also doing that. So they have a competitor in that space as well.
We hear so much about data. I remember I did a consulting project for Mobike back when they were going strong, and the whole idea was that they have this data that they can use, and you could be riding your bike past the flower shop, and then suddenly something would pop up to give you a discount to buy some. And that was a bit of a pie in the sky that I guess maybe never really came to fruition. But here is a real case of data, massive amounts of consumer data actually being put to a very real and practical use. I actually want to jump ahead to Brian real quick, and I'm going to throw him a bit of a loop because I don't think this may not be totally your domain, and B, I didn't ask you to prep for this, but all of this data, could any of us imagine that a US company, or maybe Google is doing this and Amazon is doing this, but could one of these companies move and similarly be a distribution platform for financial products in the US based on all of the data that they're seeing? Certainly Amazon is the logical player to do that. But is there a reason why no one is doing this in the US?
It is a timely question that you're raising here, in part because of the suit that was just brought by the US DOJ under the antitrust laws against Google. And I think that US antitrust laws might make this model a bit more difficult in the States for somebody to be sort of integrating their data usage in the way that we've seen Tencent and Alibaba do in the financial sector. I'm not an antitrust expert by any stretch, but my understanding of sort of what the concerns and considerations are, this may sort of play directly into that kind of an issue, and we're going to see this now fought in the U.S. courts for a long time with respect to Google and just what they're doing in terms of search and other things. But at the end of the day, these sort of more modern antitrust matters that the U.S. government is pressing, it all hinges on the data and how it can be used, could be used, who could have access to that data, is it truly sort of secure in private hands, which is something that is viewed very skeptically from the U.S. when it comes to China. So I think it's a great question that you're raising, and I think my short answer is, in the U.S., I think this model would be very challenging to replicate.
There was a bit which, James, you got into on your earlier podcast about how the government in general, and I think the People's Bank of China, PBOC, was encouraging innovation in this space because they know that the traditional big government-backed banks here were never going to make it happen, and we're not the right players to do that. And so that's been a traditional story in China of where sometimes the government, the regulators kind of take quite a laissez-faire approach, especially compared to what we're used to in the US, to encourage innovation. James, if you had anything to say on that.
So I saw Zhou Xiaochun, who used to be the head of the PBOC, speak at a Caixin summit a while ago, maybe it was 2018. And he was asked about this, and he said, 2018 was kind of the end of the peer-to-peer lending mess. A giant mess that they kind of let grow into a massive mess. So they're like standing off, and kind of their laissez-faire attitude towards fintech had some positive things, which I think you see with these ecosystems that Alipay has been able to make, and Wechat as well. And you see a lot of consumer surplus created with better lending to SMEs, less friction on payments. This is all very positive stuff. But then you had a pretty big kind of black eye where they didn't really regulate peer-to-peer lending early. And a lot of people lost money, caused a lot of pain. And so there's kind of both sides, right? There, it's, you can kind of let the market run, and sometimes it overdoes itself.
Yeah. Jemma, so you have the very difficult task of trying to have a crystal ball and look into the mind of Chinese regulators and what they might be thinking about all this. And the kind of the basic question is, has Alipay gotten too big? Are the banks that maybe weren't up to the job originally to build a integrated digital payments platform like this, are they regretting not being involved earlier? And how does DCEP fit into all that?
Well, I guess before we go into those interesting points about the implications for Alipay, for the listeners who may not be familiar with what DCEP is, it's essentially the central bank backed digital currency, so a currency issued on the blockchain that's backed one for one by the RMB. From a user perspective, there's actually no difference between the value of one DCEP versus a normal RMB, right? It has the same purchasing power. It's essentially backed by the credit of PBOC. Now, in terms of how DCEP works at a high level, and there is quite a sort of lack of clarity around exactly how this works, but from my readings, it's actually a wholesale currency. So meaning that PBOC don't distribute it directly to the consumers. PBOC is distributed to the consumers via the four major banks plus UnionPay and definitely Alipay. I can't remember whether Wechat Pay. I would say Wechat Pay is in there. So in a way, rather than saying it's in competition to Alipay, I would say it actually complements Alipay, because Alipay, the thing with DCEP, it's an actual currency. Alipay is almost like it's a channel to get this currency to the consumer. PBOC don't want consumers, people like you and I, to go up to PBOC and say and deal with all the issues of consumer currency expenditure. So that's where Alipay comes in, and their network helps, right? All that user base from Alipay and Wechat Pay is perfect for this. Where Alipay might feel a bit of competition is, at the moment, merchants using Alipay are required to pay a fee, a small fee, right? It gets deducted automatically. Now with DCEP, because the fact it's, it's backed by the central bank, it at least initially probably be fee free. So from a purely commercial perspective, it may be that, merchants say, well, if you pay with DCEP, well, I'm going to give you a discount because I don't have to pay these intermediary fees. But I think from a high level, it would complement. The PBOC would need the network from Alipay to distribute it quickly to everyone, right? Like in Shenzhen, I think the government's giving out 1.5 million USD of free cash, right, in the form of DCEP via Alipay, Wechat Pay, to residents in Shenzhen to encourage them to experience what it's like to spend that money. So I think from a domestic Chinese perspective, it's quite complementary. Now, it's different matter for cross-border, which I think, is actually another reason why the Chinese government is quite big on pushing ahead with this digital currency. It essentially creates an independent parallel system to SWIFT.
Yeah, I was reading about that as well, and didn't quite make the connection, but I know people are making that, have thrown that out there as well. But can you walk us through just a little bit more how that might work, as far as clearly they don't like the US dollar being the default global currency, and all the control that gives. Yeah,
so anyone who's done cross-border transactions know how painful and how expensive it is to convert one currency to another and send it across borders. The current system is to send money cross borders, you have to wait for like T+3, some cases like TransferWise maybe T+1, but traditional banking T+3 SWIFT to settle. Whereas on the blockchain, by sending digital currency, it actually gets rid of the intermediate clearing and settlement. So essentially, as soon as you send DCEP or any digital currency, it gets in the other person's wallet within a few minutes. Some ways, there are people sort of, guesstimating or hypothesizing that the DCEP, from a cross-border transaction perspective, could be a way for to promote the internationalization.
Yeah, I could add there as well. Jemma alluded to this earlier, that given the way the U.S. chooses to sort of throw their regulatory weight around, given that USD is the benchmark currency, given the traditional banking's reliance on the SWIFT system, all the more reason that DCEP and other similar types of mechanisms may gain favor and gain momentum in the coming years, as people try to disentangle from that and get out from under the shadow of the USD and the US as the financial hub of the global marketplace. So I think it is definitely an important macro development to sort of keep an eye on.
If I can just add, I think even Juncker in the EU, he was saying how it's like pretty amazing how when Germany buys something from France, they have to do it in dollars. Why can't it be in euros? It's really the sanctions, I think, that kind of bother countries. There's a book called Treasury's War written about this and how it's like a new tool, but it's probably, how often you use it is really the question.
Yeah.
The pushback in my mind about whether the RMB can really internationalize, if they want to be a global reserve currency and have lots of things priced in the RMB, they kind of need to change the structure of their economy in a way that allows more consumption, because what happens is with consumption, you can push out your reserve currency to the rest of the world because you're importing stuff, which China could do. They need resources, they need oil, they import coal, food, things like this. But it's a very different, like when your currency is pegged to a basket, or the dollar, but a basket, you can kind of devalue, lower the value of your currency relative to that other currency if you're not the reserve currency. If you're the reserve currency, you don't have that flexibility, which removes a stabilizing factor for your economy. And if you need that stability in your economy, you might not want to do that. But let's say hypothetically, something happens in a flashpoint around China, say with an island, and massive sanctions are released. They need a way to keep going. So maybe DCEP becomes that. But then we're really looking at a massive balkanization in the world.
We'll see what happens in the U.S. election in 2 weeks, and that might affect that significantly. So
yeah, seriously, it's kind of ironic that basically, James, what you're saying is that the U.S. trade deficit is a strategic advantage almost of
benefit
the country,
yeah.
which
it is. And I would also add free trade agreements to that, which support that. But the problem is the U.S. did not do a good job taking care of the people who lost from free trade. So we're seeing on the U.S. side, there's a constraint where we're pushing up against, people losing their jobs in towns that have been hollowed out. And, when you lose when you lose a factory, you lose not just the workers that work at the factory, you lose all the logistics around it, the schools, and the tax revenues. You lose kind of a lot.
Back to Ant a little bit, and Brian, when we were talking just now about the U.S. dollar being kind of the global reserve currency and transactions being settled in U.S. dollars and everything flowing through New York, I guess that's, to me, has always been kind of the nuclear option, and we kind of hinted at it already. Is that you kind of play with fire a little bit if you use that regulatory kind of tool too much, and you would create incentives for other countries to try and get out of that system. So the entity list is something that's been talked about recently, that Ant may be put on that list, much as other companies like Huawei and Hikvision and SenseTime and Megi and some of those, Megiv, I think is the other one. Those guys, Megvi, those guys are all using AI, and they're all kind of in politically controversial uses of that AI. How does the entity list fit with Alipay? Can it actually do anything vis-a-vis Alipay? Because I understand the basic principle is you're restricting U.S. technology access for these companies that are on the list. Is the better tool maybe something to do with the banks and the banking system, but maybe the regulators don't want to go there?
Yeah, it's an interesting question, because I think in some ways it is a bit of an odd choice to try to get at this issue from the US perspective via the entity list, because the tool is not really suited for the purpose. As we've talked about a lot earlier on, if Ant's kind of primary value and genius is sort of its use of data and how it allows it to sort of, in the financial realm, sort of do multiple things incredibly well and efficiently, filling the gap where there were some inefficiencies that were existing in the previous kind of traditional financial regime. It's that data and that potential access to data with respect to US individuals, companies, et cetera, that is sort of the primary fear factor and driver. A few years ago, early in the Trump administration, as many probably remember, Ant Financial had an agreement to buy the U.S. company Moneygram, money transfer company, and that went in front of the Committee on Foreign Investment in the U.S. and ultimately they couldn't get to an agreement where they could find a palatable solution where they could mitigate the perceived risks there, and all of that risk had to do with the data that Ant was going to have access to with respect to U.S. transactions, persons, businesses, et cetera. All of it had to do with that. And that was kind of the beginning of the cresting wave of data-related intervention by CFIUS. And this is prior to the reforms that came in and the new law that was passed in 2018 to expand the jurisdiction of CFIUS. This is now front and center in what CFIUS is all about in 2020. 3 years ago, when that was first presented to the committee, it was still sort of in the early days of the Trump administration, that was kind of new. So fast forwarding to now, and as it's being widely reported, there is apparently a proposal in front of what's known as the End User Review Committee, which is a 4-agency committee made up of the Commerce Department, the State Department, the Department of Energy, and the Defense Department that make decisions about who goes on the entity list in the US. And as Art said, that is primarily a tool that is focused on limiting access to US hardware, software, and technology. And Huawei is probably the best known example of a company that was put on the entity list. For a company like Huawei that makes telecommunications equipment that needs access to US technology in terms of semiconductors, chips, et cetera, that sort of makes sense just one-to-one. Like, why would they do this? Well, this is why. You're trying to US technology that is deemed to be sensitive or that the US believes is going to be used for sort of ill purposes that cut against US national security interests. For a financial institution, it doesn't be happening. So my explanation is as follows. From what is being reported, and this makes sense to some degree, part of this is to sort of put a taint on the company to prevent US investors from getting involved in the IPO. There's sort of an idea that once a company, especially a Chinese company, is put on one of the lists, whether it's the entity list or the treasury list, the SDN list, which is really the nuclear option, then that just means that US entities, by and large, are going to be a bit more skittish about having any dealings with them because you just never know sort of what the knock-on follow-on effects of that are going to be, what that's going to do for their future growth, what that's going to do for a whole host of other things that they may be thinking about in the future. So the idea that this would somehow prevent US access or pursuit of the IPO is one piece of that. And again, the thinking is if US investors are involved in the IPO, especially institutional investors, then that is potentially going to open up vistas of access to data that these people are providing, or the sort of interconnectivity there is going to be such that it's going to represent a security risk. That's how the thinking goes in the policy circles here. Now, whether you buy that or not, I don't know, but I will say that the entity list has been used in the past few years far more aggressively and broadly than it had been traditionally. Traditionally, it was all about technology. It was all about usually going after actors that were actively violating US export control laws and sort of saying, no, you are no longer going to be privileged to be able to have access to US technology. We're imposing conditions on your ability to do that. Now it is deployed much more like the treasury list, much more like the SDN list is, which is to say the US tries to treat it like something that will just make somebody radioactive. And that's in some ways that's a signaling mechanism, certainly to US interests and to sort of allied interests in other parts of the country, the EU and other places. That is kind of the approach. And there are now, it's done in circumstances where there's not necessarily a concrete sort of evidentiary basis to do it, to say that, the Ant Group or Ant Financial or anybody in the Alibaba family is somehow violating US export control laws. I have a hard time believing that that's the report that's in front of the End User Review Committee at the moment. It is probably being presented as a much more nebulous sort of foreign policy and national security risk that needs to be addressed here, and that's what they're likely hearing at the moment. But then that I think begs the question is, well, why is this what the US is doing? In some ways, in my view, this is kind of a half measure. It's signaling, some have called it symbolic. It may have some deterrent effect with respect to US investors, but there is going to be nothing illegal, certainly, about US involvement in the IPO if Ant is put on the entity list. That is clear. If the US were to pursue the SDN list, if it were to pursue the nuclear option, so to speak, that is something that would create ripples in Beijing, certainly, that would likely result in retaliation. For a long time, people have wondered whether that's where Huawei was heading, is being put on the SDN list, the treasury list. And I think the US has restrained itself to the extent that this administration has restrained itself in anything. The fact that it has not done that, I think, is a signal that with respect to a major Chinese company, they're afraid to do that, quite frankly, because they are afraid of the blowback and what that is going to do. I truly believe that. And so that is not what they're doing here, with good reason, because I think they would have even less sympathy from the global community to do that with respect to Ant. Huawei, I think, has a case to be made that there are certain things that are doing that are detrimental to the US and other countries. I think with Ant, that's probably a much harder case to make. The last thing that I'll say is that the other option here, potentially, sort of option, if we're talking about ABC, would be that something akin to what we've just seen with ByteDance and TikTok and Tencent and Wechat would be put in place, where there would be some sort of prohibition or restrictions placed on persons subject to US jurisdiction to have anything to do, essentially, with transacting with Ant. I have not seen that sort of rumored or reported anywhere in the US, but depending on how things play out with Tencent and Wechat, the restrictions that made a lot of noise that Art and I talked about a couple months ago, they're currently not in place at all. And they've been withdrawn by the Commerce Department, and they're now tied up in the courts. And so there's a fight going on about whether those are going to be reinstituted, what form they're ultimately going to take, whether they pass muster under the US Constitution and many other sort of legal principles in the US. But for the moment, they're off the books. There is nothing in place. So I don't know that everybody in the US, in the Commerce Department or elsewhere in the government, is sort of eager to sort of go down that road again, given that the first try has not been successful thus far, at least. But that is also a possibility, is that there could be something very targeted in the form of like an executive order that could go after Ant at some point. But for now, it seems like the entity list is what is being considered. And again, I have a hard time seeing how that's going to be terribly disruptive to Ant, but only time will tell. And if nothing else, it will certainly be mud in the eye of another big Chinese company, which just engenders more ill will and more potential retaliation. And the unreliable entity list, which is something that people have started to take notice of now that MOFCOM has issued sort of actual rules to be implementing that at some point and be putting companies on, presumably mostly US companies. We'll see how that plays out. And again, I said this earlier, but I do think what happens in the US election in a couple of weeks is going to play a big part in sort of what we see for the next 3 to 6 months, if not beyond, with respect to all of these issues.
Okay, so I'm two things. First one, and this is probably easier. Has there ever been a large global company like Huawei that's been put on the SDN list? And then I think the second question is, when it comes to the entity list, who decides what goes on there and how that works, and how could that change with a different administration?
So on your first question with relation to the SDN list, I don't want to say that the answer is no, there's never been a large company, but for the most part, you don't see companies from the more well-developed economies going on the SDN list. It's sort of it's the primary targets of sort of US foreign policy ire, now of which, frankly, China is one now, but still we have not seen, if there's ever going to be one, it'll be a Chinese company. I will say that. And there have been some large Chinese companies, certainly, that have been put on the SDN list, but nothing on the scale of Huawei or Ant or any of these folks that we're talking about now. So that would be pretty precedent setting, I think, if a company like that got put on. So that is, I think, something to keep in mind. The second point with respect to the entity list, who decides is, like I said, it's that end user review committee. It's representatives of those 4 agencies in DC: Commerce, State, Defense, and Energy. As a practical matter, though, right now, the way this is happening, it is all top down, coming from the White House. The White House and the sort of the hawks at the White House and close to the administration are saying, we want to go after this segment of actors in China, put them on the entity list. Let's figure out how quickly we can do it. That's what's happening.
So that
could very easily change. I would expect. I mean, look, the sort of U.S. Tough on China government may very well be here to stay, even if we have Joe Biden in the White House. Now, the tone will be different, the tactics will be somewhat different, but I do think that is here to stay for the foreseeable future. But certainly, with something like this, though, this is a good example, I think, of where a different kind of top-level policy decision-making process might yield a different result, where somebody like Ant might not be in the crosshairs if we were having this discussion a year from now.
I mean, to be honest, it doesn't make sense to me, because Ant's business in the US is minimal, if anything. And yeah, I just don't see how even Ant would take it seriously.
Right, and that certainly is what the comments and the sort of anecdotally from other experts and folks in China who've looked at this seem to be saying, and I tend to agree with that. The only comment I would make on that is, again, because it is a technology-based penalty or restriction, if somehow, and I don't know enough about how the systems have been put together, how the software code's been written, how the AI is deployed, et cetera, if there was knowledge within the US government that there is some US-based technology or software or something that is the linchpin of Ant or some aspect of their business, perhaps that could have an actual effect. Because then
they're using an Oracle database.
Right, theoretically. But I will say, first of all, number one, I would assume, right. I would assume, number one, that most of what they're using is organically kind of homegrown in China and not reliant on US tech. That's almost certainly the case. Number two, as Huawei has demonstrated, even with being added to the entity list, there are many other ways under the export control rules of the US that you can still obtain what is essentially US technology, even without violating the rules of entity list restrictions. And that's why the rules have now been tightened with respect to Huawei on more than one occasion, in part because that was seen as a loophole or a gap once that restriction was first put in place. So I agree that I don't know that it's going to have much other than a symbolic effect. But at the same time, whenever that name runs through a bank or any kind of screening that's being done by any company or any institution anywhere around the world, Ant would pop, and it would pop for being on a restricted list of the United States. And that is something. It is not something to be completely dismissed, even if there's not necessarily legal restrictions that go along with it.
It's interesting that China is just opening now to the U.S. financial institutions after kind of promising that they'd do it for, 15 years or something.
But they need allies. They need allies
for that, I guess.
For this fight, yeah.
Should we bring it back to DCEP?
I wanted to just hit a couple points quickly that Brian mentioned, to say that the nuclear option is probably, I would say also in my lifetime, I never thought it would be used vis-a-vis China, but I think at this point also we can say that anything is possible given what's happened in just the last year or so. But that would invite such a response from China, which has been relatively restrained up to this point. I'm sure they're chomping at the bit, and with Huawei and Tencent and TikTok and all these cases coming up. But that would be where I think the gloves would finally come off, and it would be nuclear in that it would be mutually assured destruction, I think, for all the US companies doing business here as well. But DCEP, please, James, if you had a question.
Yeah, so the only comment I'd make on DCEP with how it reflects to Ant, I agree with Jemma, what you said about how they need Ant and kind of grow the adoption of DCEP. But the thing I worry about, and maybe this is totally unjustified, but it's just a scenario in my head, is that, when DCEP launches, I read something that they're going to have kind of a centralized QR code system. So instead of using like an Alipay QR code or a Wechat Pay QR code, it's going to be it's going to be DCEP, and it's going to go through the banks, the intermediaries, and then it's going to go to the PBOC. And so it's like, the way I think about it is the banks were really upset when Alipay did Yuobao, and they created the payment systems, and they started this just encroaching into their territory. And this is a way of the banks to kind of force themselves through like flipping a switch almost, forcing themselves back into those transactions, being able to collect, transaction fees, which would, is a pretty sizable chunk of these companies' revenue.
And I think in that way, you're right, James. I think the core premise of the DCEP is not so much helping the banks versus Alipay or vice versa. It's actually more strategic than that, as a way to blockchain, when it first started, Bitcoin, when it first started, 12 years ago now, it's really, anonymous, peer-to-peer, decentralized, this utopia type thinking that the libertarians have it, right? But obviously with DCEP, it's almost like a very centralized version of something that is meant to be decentralized. I think from a government perspective, it really helps them to, again, better monitor transactions, whether it be Alipay or banks, right?
Is it an anti-graft thing? I mean, is this like
better insight into the capital flow, whether it be in or out of the country?
Yeah. So where are the loopholes that people are getting their money out of China?
Yeah.
And how do you? I mean, the thing about SWIFT is you can unwind transactions if it's immediate, right? Like the thing about digital currencies is they're pretty fast. I mean, is there still going to be a way to unwind transactions? Like, I mean, if someone kind of gets their money out of the country somehow, can they like claw it back?
In theory, no, because once it's confirmed on the blockchain, the money is gone essentially. So,
but if it's centralized, could they just say,
So
These are gone.
what they
These
could
tokens
do
are
is they could
evaporated.
before it's approved, but before it's sent, right? The government can step in and they can have all these KYC, AML measures in place to essentially, these
Rules,
these algorithms that can put in place to be the gatekeeper. Because tokens or coins on the blockchain, you can flag them. You can tag the accounts, just like you can in a bank, in a bank, right? So in a way, there will be ways to do that in this DCEP world. So I think, helping the banks and leveling the playing field is actually a byproduct rather than the goal of this. If there are any benefits to the banks. In summary, DCEP, I think, is really more about better financial control by the government on what's going on in the economy.
So with that, I want because we're coming up on about an hour of here, but I want to just do one quick go around of everyone on the panel on what we think of the future of Alipay and obstacles. I can think of data and access to data. Of course, the transactions fees being squeezed with DCEP coming in is a potential threat to one of their core businesses, but that's maybe becoming less and less a part of their overall business anyway. But what strikes me as interesting is, especially with the QR codes potentially being nationalized rather than unique to each platform, like even Meituan has their own, right? The Tencent, Wechat Pay, and Alipay. If the QR codes are centralized, the government is getting direct access to the data, and Alipay maybe is not getting the same treasure trove of data that they're accustomed to, and which they're helping them to build all these ancillary products, which are now actually a bigger part of their business, is less access to data. Locally, maybe because of DCEP. Internationally, Brian, are they limited in their expansion possibilities because of regulations and because they rely on so much data? And then James, maybe as the businesses which use this data are growing more and more outside of their formerly core payments business, is that potentially a threat? So Jemma, is there potentially limited access to data than what Alipay is accustomed to, and is that a threat to them?
I actually think not, because it's anyone's guess, right? What will change, particularly, when this DCEP comes about, what sort of data can they get? But I would say that in order for Alipay to give out DCEP, they would need to record the transactions on the blockchain. It's a permissioned blockchain, meaning that it's actually even more transparent to Alibaba, to Alipay than in the current system. So if anything, I would say that at least from a digital currency perspective, they will benefit from more data. The hash or the metadata will likely stored on the blockchain, right, with the actual file stored off the chain. So in that way, it makes the data more, I guess, more tamper-proof. Because you can't change something that's already on the blockchain. Very hard to tamper it. I think that would benefit Alipay.
And Brian, on the regulatory front, especially international expansion, it seems like, as we talked about in the EU and let's say the US, there might be challenges there. Of course, they've been trying with some strategic kind of corporate venture capital investments in India. But even there, I still think that they probably have some challenges because, again, they are going to be the elephant in the room and trying to do things their own way and potentially crowd people out. How about regulatory obstacles? And do you see that being a challenge to them globally, kind of pioneered by the US, painting them with a kind of a tainted brush?
Yeah, so thinking primarily through the US lens and also, the EU approach on this, depending on what part of the EU you're in, is somewhat similar, whether it's rooted in privacy or it's rooted in national security, or those things are sort of kind of conflated. There's just a lot of protectionism when it comes to sort of data of home country citizens, right? So this is at the root of what we're seeing right now with respect to TikTok and WeChat in the US. I think it's underlying a lot of the hostility that we're perceiving from the US government toward Ant. And so I do think if there were ever intentions certainly to try to expand in the US in any sort of meaningful way, even through partnerships, not even through acquisition, but through some types of partnerships or other things. I mean, again, they'd have to contend with CFIUS, they'd have to contend with a whole bunch of other regulatory considerations. Potentially, that could be quite difficult for them. I would say that with respect to the US, I was just thinking about this earlier. It has always struck me I have not spent nearly as much time, obviously, in China as anybody that I'm part of this panel with, but in any of my visits, the sort of electronic payments and the sort of that aspect and transition in China is far, far, far ahead of where it is in the US. The adoption and the technology and the user friendliness of those apps and platforms is just not what it is in China. And so even with some of the leaders like Apple Pay, Google Pay, what have you, you just don't see it. So if anything, I could certainly see those types of companies trying to either replicate or possibly partner with an Ant or maybe with WePay, it's going to be much harder given the current restrictions. But if that were to go away, I could see trying to sort of, mimicry being sort of the highest form of flattery in the US. But in terms of sort of a pure play to get into that market for an Ant, I think that's going to be an uphill battle.
As it is for so many Chinese technology companies right now, no matter what their business is, it seems like. Thanks, Brian. And James, you covered this a bit on your podcast earlier, but threats we haven't talked about yet.
So I think there's, just to list a couple, there's like potentially lending caps, but that might not matter. If what Jemma's talking about with data, if you're a member of this like data lake for DCEP and you're all participants are able to get access to it, that would kind of erode the advantage that Alipay has having their own data. It would mean everybody else has the same data. Then you're competing on algorithm of making a better credit decision. That is a much, much harder thing to do than, having your own data in-house. So that would change Alipay's business significantly, in my mind. I think they're probably their best thing they could do, which is what I think they used to call it the financial cloud. So like kind of trying to make an AWS, Amazon Web Services for financial services, which doesn't really exist kind of anywhere. And so if they can do that, now the problem is Chinese financial firms do not like to share their data, which is why DCEP is kind of an important thing. And even amongst each other, when they're in kind of organizations together or associations, they don't like to share it. And so, I have a hard time seeing how these firms are going to open up and allow Ant to come in and start to build processes like an ERP type systems into their business where it becomes very hard to get out and they're kind of entangled in there. Now, if Alipay is able to do that, it'll be one of the best businesses in the world, but it's, they got to do it quietly and carefully and slowly. Like
I think lessons have been learned.
Slowly,
lessons have been learned. There wasn't the Cainiao, right? Ali went in and kind of helped all these logistics providers build a better OS for logistics deliveries, and then suddenly they were on their knees at the behest of Alipay. So yeah, it is kind of a Trojan horse almost. Yeah, fantastic panel. I really appreciate you all coming on. So now, James, you have a podcast, China Tech Investor. Brian, you have EMBARGOED. Right. So I definitely want to plug that for our listeners who are looking for other good podcasts to listen to. Last but not least, if anyone listening wants to contact you guys, you're all on LinkedIn, I guess. Is that the easiest way to get in touch? Or Twitter? Any Twitter handles you guys want to plug?
James Hull X on Twitter and James M. Hull on LinkedIn.
LinkedIn, easiest way to find me as well. And please, check out EMBARGOED. We will likely be talking about Ant as well on our next episode.
And for me, LinkedIn is best. Just my full name, Jemma, and you'll find me.
Thanks, guys. I don't want to keep you up any later. And thanks for our audience for listening to another episode of Ganbei. And that's a wrap.